Blog Talk Radio.
Good morning, it's Brian Dooley, CPA with Tax Talk. And today this broadcast is being broadcast as part of my live talk to the California Society of CPAs on the tax advantages of e-commerce in the cloud. We're looking at how our ancient tax laws save many of the more advanced firms a fortune in taxes and how it can help small business too. I will be talking for about 45 minutes. So if you want to play this on the road instead of at your computer, you can call our toll-free number, which is 888-203-1112. That's 888-203-1112. And then enter the code for this show, and that code will be 710-2290, and then the hash sign. So 710-22290 and the pound sign. So I'm going to get Rob, my robot assistant. As you know, I like the virtual world. I'm going to see if he's around here to help me out. Rob, how are you doing today?
Brian, I am feeling fine. Thank you.
Okay. Well, I'm going to let you take control of the buttons. I'm going to walk over and start the seminar in just a second. So hold on here. Being said, I do have a book. I have an international tax book. And the first chapter is this topic. The first chapter is the virtual world, the world that is unseen. And I'm going to wait for my slide to work its way through for this famous man. Do we know who he is? The most famous tax person in this country? Civil War baby. His father was an officer in the Confederate Army. Loved Robert E. Lee. Named him after Robert E. Lee. This man was the head of the House Ways Means Tax Committee from 1930 to 1954. This was his world. Steamships, text messaging. 1905, the light bulb in the White House. They put it in 1890, but President McKinley and his wife were afraid of electricity, and it wasn't used until 1905. This is the new light bulb. This will be important towards the end of the discussion. The first map, 1675, of streets. Wonderful map. England really needed it. And we kind of stayed with maps until what? About 1990, 1995. Got a little Google, Yahoo map system that helped us a lot. Kind of smart information. But now we move to what? GPS driving systems. Now my GPS driving system has knowledge. When I'm driving, I live in Southern California. I have to work in Los Angeles, live in Orange County. When I go home, I have a choice of 5 roads all full of traffic. I tell my GPS, find the best route home. It looks through the hyperspace, looks at the traffic report, routes me around, quite often through Watts in South LA, you know. But I finally get home. Right. So this all has to do with today's world, because the tax code we have was written by a man who was born in 1864, and if Stasha was here, she would turn that off for me. Stasha, who are you? Thank you, dear. Born in 1864, education, high school education. High school education of 1880 education. Somehow he works his way up, manipulates his way into the head of the House Ways and Means Committee. Great Depression hits in 1930.
And until then, keep in mind, our tax law started in 1913. We're kind of fudging around with this concept, some Board of Tax Appeals cases. But in 1930, it became apparent that we needed foreign capital, we needed foreign help. So the 1930 is the foundation of all of our international tax laws, except for one. I'll get to that in a second. By 1939, we had the first codified law, the Tax Code of 1939, that had these laws embedded in it. The only change was in 1960, where the concept of force of attraction was repealed with replaced with the concept of effectively connected income to a United States business, a United States office. So, as we approach the e-commerce world of cross-border transactions, keep in mind that the head of the House Ways and Means Committee concept of e-commerce was on a steamship, not a diesel ship, a steamship with refrigeration. During that period of time, we caused the Great Depression in agriculture in England. We were the China of the world. We produced goods cheaply, and with the concept of refrigerated transportation, we flooded the UK and destroyed their farming industry. One other thing happened worldwide, which was the advent of machines. They could let go of farmers, replace it with equipment. We are now kind of facing the same thing now. We have machines doing some thinking for us. So to really apply today's world to 1939 tax law is going to be a challenge for all of us. We're going to have to do some deep thinking. There's really only two cases that I found that address the issue. The first case is very exciting to me. I'm going to practice my Spanish for you. The first case is PDS Negras Broadcasting. Now, this was a radio station in Texas, in Eagle Pass, Texas. Eagle Pass, Texas is real close to the Rio Grande. And when it started, there was no FCC. You want to broadcast radio, you just pop up a tower. You were in business. FCC comes into place, a lot of new rules to qualify. The owner just did not want to do all that. So he moved his radio station about 8 miles to Mexico. Huge tower, 50 megawatts of power, which was a lot for those days. Broadcasted through the whole United States, Canada, Cuba, as far as New Zealand. And his advertising audience was primarily United States. So his customers were people who want to advertise in the United States. But, he didn't want to really deal in Mexico because, it's not as much fun as Eagle Pass, I guess. So there was a hotel in Eagle Pass called Eagle Pass Hotel. And he would meet his staff there. He'd meet the salesman there. He did an incorporation there. He opened his bank account there. When he signed an advertising agreement, it was effective to the laws of Eagle Pass, Texas, in case there was a lawsuit. He did almost everything in that hotel. The hotel gave him the spot for free because he bought food. It's not like this hotel was free. And the IRS kind of got upset because he wasn't paying any tax. So when he started his station in Mexico, that government, as they do now, requires you to form a local corporation, one formed in Mexico. So the tower, the broadcasting facility, the crew were in Mexico. The shows were, in the old days, were either done live at that station or done as recorded. Okay, it's just audio, and then broadcast from there. The advertisers would either broadcast their advertisements in the United States and ship them down, or they would actually go to the facility in Mexico. So IRS came in and said, look, you're doing an awful lot here. You have an office here. You have this little basement in the hotel that they have given you to use. When you meet your advertisers, they bring everything in. This is where you're doing everything. So I went to the court, and the court said something really important. And I think I'm going to find it and read it to you first. Because, when I read this case, I kind of think of the Tea Party. And the court was pretty adamant about the sourcing of income. The sourcing of income, according to the court, is dependent upon the government that protects you. Let's see if I can't find it here. Here we go. The basic rule is that the consideration for taxation is that the situs of taxation is the protector of life and property, and that United States government and that the United States government is that income which is created by activities and property protected by that government. So in the case of the broadcasting studio, that studio was protected by the government of Mexico. So the court held, despite all those neat things that Ira said, that the income was foreign source income. And that has a lot to do nowadays when we are on the web, B&A's out here advertising their web-based stuff. If B&A were to put this giant computer in the Isle of Man, it would all be foreign source income. All they would have to do to avoid U.S. taxation is to form an Isle of Man corporation, plop that computer over there. They could get paid from everybody here in the United States. They could pay on the Visa card, clear American banks. It's all going to be foreign source income. So as we look to e-commerce, there's a variety of type of e-commerce. There's what I call the Sears catalog type, and that's like Zappos shoes. They're based in Las Vegas. You get on the web, you find your shoes, they ship it to you, you get it in a couple of days. You don't pay sales tax, the state's unhappy. That's e-commerce. But that's kind of the first generation. That's like 1990 e-commerce. Then we kind of go to the next step of e-commerce, where we don't ship tangible property. And of course, we all know about Apple and iTunes. It's very interesting, because when you buy an iTunes, what are you buying? Are you buying music? Are you buying entertainment? Just what are you buying? And my thought on it is that you are buying a non-exclusive right to license this music, to play it. You're not allowed to resell it. You're just allowed to use it for yourself. Your friends can hear it. Law is a little bit confused if you can pass them a copy of the file, and that's not so clear, but they can at least listen to it. And licensing is a lot like rental income in cross-border taxation. So when we determine the source of rental income, it is where the equipment is located. So if I'm renting this computer, if the computer's here, it's domestic source. If I was on a vacation in England, it would be foreign source. Same computer, I just moved it with me. Licensing is a little bit like that. Licensing, as the judge said in the case, is source on the government that protects the rights. So presumably iTunes has a U.S. copyright on the music or some U.S. rights, and it is U.S. source. But that kind of confuses the issue, because so many intangibles now have patents or trademark licensing throughout the world, because they don't want to get knocked off by some other country. And if there's an English copyright, the way that, or a European copyright, the way that gets protected in the United States can be just through a treaty, through the UN. You don't really need to go to the United States and copyright it. You can if you want to, but you don't need to. So in cross-border transactions, as we're looking at copyright material, movies, music, it gets a little fuzzy. And where it becomes exciting is that the businesses that are creating wealth are not the Zappos shoes. They do okay, but it's the businesses that sell the intangible. The intangible cost is cheap to reproduce. Facebook's making a fortune, Google's making a fortune. So our clients, some of them are moving towards this event. So I'm kind of excited. I'm going to Denver next week to meet a possible new client. And I always like to kind of kick the tires. And this client's kind of interesting to me, which is why I'm happy to go. My wife's a teacher, and when she got her master's, we had to go to some trade shows. The one that fascinated me was homeschooling. I always have this fantasy of no government, we just do homeschooling. It was about 1995. It was kind of nice. They have VCRs back then. I think the DVDs were just coming out, but not the kind where you could play games. They had VCRs, they had some hard copy books, a lot of neat material. Maybe a National Geographic VCR on some aspect of nature. So that's what this client has. He has that kind of a project. And he's working with his team to move to the next generation. Now, if this was year 2000, that next generation would be DVDs, and maybe even interactive DVD on your computer. So sourcing for that transaction would be pretty much like the books. You get on his website, you order the DVD, the sales tax on a DVD, it would be sourced in the United States. If it was sold outside of the United States, we know that sourcing rule is where title passes. It determines the source on exports. So, but he wants to go to the next step. He wants to go to the step where he doesn't even have to ship the DVD. He doesn't even have to download the file. He wants to go to the step where he has a big computer that has more capacity, can be smarter, and the student, the parents, are actually doing it with a touchpad. The touchpad becomes the desk. And the educational is feedback from the touchpad. Maybe he has on his website a National Geographic story about animals or history, but everything's from his website. So now the question becomes, where does he put that computer? Where does that computer reside? If it resides in Colorado versus the Isle of Man. I picked the Isle of Man because the Isle of Man has a lot of electricity. They have a contract with France. France has atomic power. They export electricity. So if you do look at a foreign hosting place, you want to be sure they have good electricity. So now the question kind of becomes, what is this computer providing him? So we saw at the beginning I had the first map of England, definitely information, like a Thomas guide, definitely information. You buy that map, you're buying tangible personal property with information in it, kind of like the Encyclopedia Britannica. Then over the years, early 1990, we got the Yahoo Google map. Still information, but instead of us having to flip the pages and line everything up, it did it for us. And we would print it out, still information. Now, what do we have? Now we have equipment that has knowledge, more knowledge than I have. I don't know how the traffic is. I don't know how to match up all those roads. I mean, I could figure it out. It's going to take me an hour or two. My GPS is going to do it in a few seconds. So the question is, what kind of income is it when a computer has knowledge? Not rent, not a licensing. You have no license. You have nothing to pass on to somebody else. What is it? So there's one case I found. Now, I don't know when you folks started working. I started working in 1967. And photocopies was on thermal paper. Big deal, fun. And they would fade after a while, and but that's what we had back then. And then Xerox came out with the paper copier. It was like magic. You put it in, poof, you got a copy. And I thought, how is this possible? So Xerox knew that they had something special. And like any business, they wanted to really capitalize on it before competition comes out. It's only a matter of time before they had competition. And that was in the early 1970s, where we were in a great recession. Kind of fun being old and getting to repeat history. And Congress back then had what's called the investment tax credit. I mean, you recall that great tax break. 10%, we buy equipment, 10% comes right back to you. No questions asked. Good deal. And so Xerox wanted that investment tax credit. One of its biggest customers was the United States of America, in particular the Defense Department. So they got a whole bunch of these things. So Xerox tax team, of course, did the return, took the investment tax credit. And under the law, if you rented equipment to a nonprofit or a government agency, there's no investment tax credit. You had to rent it to a commercial business. And IRS came in and said, what are you guys thinking? This is America. This is a governmental agency. And Xerox said, well, of course it's an agency, but it's not rent. And IRS says, well, what do you mean it's not rent? Here is your equipment in our office. Xerox says, no, it's not rent. This equipment is smart equipment. It is like a human being, like an artist, a photographer. It's making you a picture. So when Xerox charged back then, they wanted to maximize their profit. They charged by the copy. I don't know how many of you had copies when you first started off. It was by the copy, and they had a counter come in. The more copies you made, the more value they gave you. So they were doing value-added billing, way ahead of our CPAs, value-added billing, and they were charging you by the copy. There was a base fee, but basically by the copy. And so it went to court, of course. And the court case, which I have in my outline, matter of fact, when I talk about my reading, I want to back up a little bit. I was told that we would be getting Adobe files. So in my stuff, you can see some blue lines. All of those are hyperlinks to court cases like the Xerox case and so forth. If you give me your card afterwards or send me an email, I'll send you the Adobe, because the Adobe file has twice the value of the paper file. So anyway, I was took him to court, and the judge, this was a great case. This is one, you know, it's interesting, as I read these older cases, you get the feeling that the judges cared more about America, because they put an awful lot of work in both of these cases. This judge went back and looked at all the court cases on vending machines, which is very interesting to me. I didn't think there would be a court case, but there was, and other things of that type. So this is the way the judge approached it. It says, when you rent something, you're in charge of it. I rent this computer, I'm in charge of it. The judge kind of applied it to, you rent a car. You rent the car, you drive it, you can maybe get somebody else to drive it, you decide where it's going to go, it's yours to do with what you want. And it's replaceable. This car breaks down, you call up the agency, you get another car. But when you hire a taxi, that's a little bit different. I hire a taxi, how do you ever come up here? I have no idea where the guy's taking me. I had this experience by the month in Las Vegas. I ended up at some kind of whorehouse way out of town. He drops me off. I had to pay my fare back, you know. So, but anyway, so when you get a taxi, there's a lot of things, kind of like the GPS. Now, I don't know how many of you have been over to London, but I'm always fascinated by the education of a London taxi driver. They have a 2-3 year internship learning all the roads. This is all up here. It's amazing. So when I'm in London and I grab a taxi, I'm getting a lot of things. I'm getting transportation. I'm getting a service, like a chauffeur. I'm getting a driver. I'm also getting knowledge. He knows where the road is. Not like, you know, Southern California, you have no idea where you're going to go. So the judge said, you know, when you hire a taxi, you're really getting a service. When you hire a car, you're paying rent. And the judge held that this Xerox copier, which by today's standards is pretty crude, was smart enough. It was more than just a machine. It was providing services just like a human being does. And Xerox got the full foreign tax credit, and for investment tax credit. And that has really fascinated me as we get to this stage of e-commerce. Because there's really three types of e-commerce. There's the Zappo type, which is the Sears catalog. And the sourcing of that is going to be pretty easy for most of us international foreign tax practitioners. There's a lot of law on the source of selling inventory. Do you have an office in the United States? Does it participate in the sale? Do you have an office outside the United States? Well, those laws are complex. They're there, and they're pretty, and they're solid. The next law, the next type of e-commerce is when I download my iTunes. Still pretty easy, but not so much if I was buying songs from a European producer. Probably not going to be U.S. source income if the copyright for that song was European. I can pay it here, assuming that European producer did not have an office here that was involved with the sale to me, not the production, but the sale of that product is tax-free. But now we get to the part that I call kind of like the iCloud time. And here the law becomes very much pro-tax planning. So as our great host introduced you, I was educated at USC in Los Angeles, California. Take all my classes here, my CPA in California. And been thinking about working in India. And that'd be kind of a nice change. I just got married. That would make my wife happy. And India is kind of neat because Obama allowed the Indian tax practitioners not to have to sign up for the IRS PIN program. So if you're in India, you don't have to follow any of these rules. And why is that? Because he doesn't like Pakistan. So India kind of gets a free pass. So if I were to work for an Indian corporation in India, I'm taking my programming with me, working in India, and what I earn is foreign source income. Back to my client that has the book for homeschooling. There's a lot of ways that he could kind of make the system. One, he could program a giant computer, take a hard drive, and take it to the Isle of Man. Kind of cumbersome. Maybe some export problems with the U.S. government. But the other way is he could actually get a cloud computer or virtual computer over in the Isle of Man and hire people in the United States to do all that programming, all that coding, to make that machine have knowledge, to make it intelligent. And then the customer would subscribe to, with an Isle of Man company, pay on his Visa or MasterCard. And the real question is, what's the tax effect? Does he have subpart F income in his controlled foreign corporation? Because he's going to own all the stock of this Isle of Man company. Is it U.S. source income? Is there an office? Is there an office that is effectively connected with the income earned by that company? The general law is that would be U.S. tax-free. Because the income, when we look at income for international tax, it's the office that participates in the sale of the property. The sale of the property would be the advertising, videos, and so forth. And as we learn from the radio station, when the broadcast of that advertising is from outside the United States, that's not domestic advertising. Even though it's seen by Americans, that is foreign source advertising. There is no U.S. connection. So this is where the cross-border taxation becomes exciting. Now the hard part is with all this is that the IRS has never experienced this. This is too new to them. The tax law, other than these two cases that I referenced, I have found no other cases on this topic. Now, the regulations are pretty nice. The regulations are really good at looking at what a U.S. office does. There's one regulation, 1.864-3, example 2, which is in my writing. And in this regulation, there's a foreign corporation that has its headquarters here. This is where the executives are. All the major decisions are made here. But no inventory is kept here. The bank accounts are kept here. Everything's kept here. And since that office is not involved in sales, it's not an office connected to a trade or business. So there's two-pronged test to get U.S. source income. First, you need an office that's connected to U.S. trade or business, and then you need U.S. source income. So if you break one of those, you break the tax stream for the IRS. So back to my hopefully new client that's doing the home study. He can actually do a lot here in the United States. He can manage it. He can make major decisions. He just can't have any contract signed here. Now, we know with e-commerce, nobody signs a contract. I check the box agreed to. So if that box is being broadcast from the Alaman, well, I guess the Alaman computer is the one that has the knowledge that is my agent fulfilling the contract. So this is the kind of the way we're going to. Now, as CPAs, to help our clients, the hard part is we put ourselves in an area that we have a few substantial authorities, but the profit loss to the United States is so great that the IRS is probably not going to give us a good start. So what I am doing with my clients, I'm doing an IRS ruling kind of piecemeal. So I take the part that I think is the most extravagant in planning, and I make that the part of the IRS ruling. But there's more involved than just the United States of America. There is Europe. Europe has a value-added tax. But there's more involved than just the United States of America. There is Europe. Europe has a value-added tax. And the value-added tax, when it comes to intangibles, Europe has, either by luck or somehow, outthought the United States. Because the value-added tax is assessed by the enjoyment value. So if you're watching a Netflix instant movie, I don't know how many of you have that Netflix instant video. I really like it. There's like 20,000 things on it. If you're in England watching the Netflix video, probably from a server in the United States, you have to pay the value-added tax. Just like California, I'm sure all of your firms have signed in to pay that use tax, right? You all have, right? Good. There's a reverse value-added tax. So back to B&A out here. If they are selling their products to a person viewing it, a business viewing it in the United Kingdom, they have to file a reverse value-added tax form to the UK tax authorities and pay the tax. So as we do cross-border, the trick is not just doing American tax planning, but doing foreign tax planning. As our clients' projects expand and we don't know what country they're going to go into, this becomes a challenge. Now, most web hosts will tell you the IP address and the location of the buyer. The real difficult part is just how to do your tax planning, how to fit this all together, because unlike the past where most of us CPAs could focus our tax knowledge on just American tax law or our state, as our clients so easily reach across the seas to other countries, we find ourselves in a new position. One way to work on that is to try to get a network with accountants in other countries, but it's a little bit harder with the internet because you may have clients who are selling products to 4 or 5 countries, and that means there's a lot to look at. California, by chance, is a unique state. I was looking them up for my talk here. California actually California sources the income by the enjoyment of its citizens. We're citizens of California. So, as I'm watching my Netflix instant video, if California was watching me watch it, they would assess Netflix a dime of tax, a penny of tax. So, one person was asking me, how is this going to affect the state taxes in the future? The states are going to go nuts. They were already worried about sales tax on tangible products. Now, and that's, maybe kind of okay to, tangible products, you kind of buy it in bulk, they're bigger. But how many iTunes do people download or just watching things on the video? How much BBC News are you watching and you see the ads there or CNN News? How are the states going to work that? Can all these big news stations just put their computer in Nevada and avoid state income tax? It's the same type of sourcing rules. And with the states, we have rules of nexus, and kind of like a office. So the change is going to come gradually. The states will kind of wake up one day, and there will be somebody like Toys R Us that had their trademarks in a tax-free state. There'll be somebody who's making a lot of money that has their server and so forth in a tax-free state. It's the kind of thing where we can do a lot of tax planning for our clients. We need to tell our clients that this is really new stuff. This is really advanced. We can make it domestic tax planning, try to get the income out of a high tax state. But it's just as easy to make it foreign tax planning and kind of repeat the beginning. All you really need to avoid subpart F income is to avoid the related party transaction rules. If you're selling your services to a related party, you're going to convert income into subpart F income. But when you're selling it to third party and you have your nexus in the state where you're incorporated, that's not subpart F income. All the other rules apply to a controlled foreign corporation, like reinvestment back into U.S. property. The reporting, of course, applies, but it's pretty easy to get that to be tax-free. So I have about 5 minutes left. I'm open for questions. Yes.
Very nice job. I want to thank you. So we have a server, we have a website with a server that's got connectivity to video.
There's a where?
Let's say it's in Canada.
Canada. So you have a server in Canada.
Canada, rented server. Yeah, I don't own any tangible property yet. It's part of my webpage up there. And it's got all the National Geographic photos, not really National.
Right.
My own version of that. And everybody thinks I'm a great product. And I sell them, or I license them a right to download photos for 10 cents each.
Right.
Okay. I'm here, I download my digital camera and I port it up to my Canadian server and I do all my advertising from there and I collect credit cards and it comes to my B of A account here in San Francisco. Foreign source?
Where is the copyright?
Oh, let's assume.
Yes. Okay. So his question was, he has a great Canadian server. We know he's a great photographer. He has 1,000 great pictures on his great Canadian server. There's buyers throughout the world. They download each picture for 10 cents. The question becomes, is that foreign source or domestic source? Now we know place of payment is not regarded. It's going to come back to the copyright law, back to what the judge said. It's the country that protects you that has the source of the income. So if your pictures were copyrighted all in the United States, it's going to be U.S. source income. If they were copyrighted in some other country, it will not be U.S. source income. A rule, yeah, you really want to make it a formal copyright application because you're probably going to really upset the IRS and you want to be able to win. Yes?
They have a copyright in the U.S. and in China.
Great question. Yes. In his case, he has a copyright in the United States and China. So that's a great question. If your audience is in the United States, obviously it's the American copyright that's going to protect it. If it's outside of the United States, then we fall into this real international world where the law really is unsettled. Obviously, the IRS is going to say it's U.S. source, you have a U.S. source copyright. China may say it's Chinese source, you have a Chinese copyright. And I think from that question, what's really important is you get one master copyright and you extend it to other countries through treaties, through the treaties of the UN or European treaties. So it's really important when you get a client forming a new product, you want them to start off with all the options possible. A new product, if you're thinking about this for the future, should be started in the name of a foreign corporation and should get the foreign copyright. Once you're stuck in a domestic entity or domestic copyright, it's pretty hard to get it out tax-free without Section 367 and all the stuff that we don't like. We have 2 more minutes. Time for one question. Okay.
Cloud computing is a big thing.
Oh, so you have a
Well, cloud computing is a big thing where you own a
cloud computing, right?
Yeah, and you have, people are renting your servers.
Yes, great.
Stuff. Yeah, so you have it, like, say, you're a U.S. company, and you have your servers here, but you think, okay, maybe I should move it over to a foreign.
You should. Go on Cayman, sit on the beach, have a good time. Absolutely. There's no doubt about it.
Okay, yeah,
But you need to have yourself a Cayman company, of course. Yeah, yeah.
Okay, so the strategy is to move it outside of the U.S.
Right, because
servers are out there.
Right, because what's going to happen with a cloud computer, which is known as a virtual computer, which is great. I've had one for a while. They are renting your computer memory, right? So that's really renting part of that hardware. So we're going to fall back to the rules of sourcing and renting. So it's where that equipment is going to be the source. And if you do your work on the cloud computer, back to my client with the homeschooling, he needs to be sure that he does a cloud computer outside the country. So my client's going to do the homeschooling product. He needs to be sure that his cloud computer is outside of the United States. Oh no, the end-use customer who says, I want to rent. He says, my client wants foreign source income. If you took your cloud computer here, it may ruin it. He needs to take your cloud computer in Grand Cayman and sit down on the beach and program it there. In your case, because you rent that server basically.
Well, I see. Me as a customer have to be outside of the United States to get.
Your master computer, that is the cloud computer generator, needs to be outside of the United States for both my client to get it tax-free and for you to get it tax-free. You're going to have to travel. Thank you.
Thanks, Brian. We're going to now transition to the final session before